So let's go ahead and get started with this webinar today about how the C.A.R.E.S federal stimulus benefits the multifamily operators that have been impacted by COVID-19. And we're going to, before we dive into this, because I know this is a very hot topic, there's two things I wanted to quickly mention, and I'll briefly mention them quickly. So for those of you who don't know who I am, I'm one of the managing partners with a group called PassiveInvesting.com. And if you want to find out more information about myself or our group, you can go to this website here, which is PassiveInvesting.com. And if you're interested in joining us on one of our future acquisitions, you can certainly go to our website there. On the top right-hand corner, there's this button that says Join the Passive Investing Club. And we'd love for you to join us along with our other 400+ investors that are active in our properties. And you can also find out more information about myself by going to Meet the Team and then going to Dan Handford. I'm one of the managing partners here at the group. And you can find out more information about me in my bio video that's listed here as well. The other thing I want to mention too is about our premium membership. We do have a premium membership that allows you to have a lot more education and knowledge around multifamily, everything from A to Z, acquisitions, investor management, raising capital, securing that capital, debt, finance, and a lot of different pieces inside of there. There's a 2-week free trial on this right now. So you can go there and you can easy way to go there is just go to MFIN Premium. So if you go to mfinpremium.com, you'll find out more information. Let me just see if I can type that into the box here and let that show up on the screen here. So mfinpremium.com is where you go to be able to find out more information about this. And there is a free 2-week trial. You can cancel it any time. And after the free trial, it's only $99 a month right now. So jump in there right now, and I'll see you on there. The other piece is this summit that's coming up. So we have a summit called the Multifamily Investor Nation Summit. You can go to mfinsummit.com to find out more information about that summit. And you can, on the actual page that you can see here, there is a lot of information about the event. It's on June 11th, 12th, and 13th. It is an all-day, 3-day online virtual conference, just like you would be in a live conference. We have over 40 speakers. We have really good, solid sponsors here with RealPage, the just required IMS, the investor management portal, and then CoStar, which is the data analytics software for real estate, and then also our main group here, PassiveInvesting.com. If you're interested in sponsoring this event, you can also email Melissa Broom. Her email is melissa@PassiveInvesting.com, and she can send you some information about if you would like to be a sponsor for our event as well. There's lots of different speakers that you can see on this event. You can check it out and register for it. Looking forward to having you on that as well. So let's dive in today to the C.A.R.E.S federal stimulus package, because several of you, let me just do a quick poll for those of you who are live on here. And on this poll, you can just raise your hand for this one. So there is a little place for you to be able to raise your hand at the little bar. I want you to raise your hand right now if you have a property right now that is or could potentially be impacted by the COVID-19. So for those of you who are on here right now, we have over 100 people that are on here, and I want to know how many of you have a property that could be potentially impacted by this, because I think this is an important topic that needs to be talked about right now. It looks like a good 40+ people that are on here right now. You can see the number keeps going up as I talk, but 40+ people on here right now have been impacted or could potentially be impacted by the COVID-19. So thank you for those of you who raised your hand and participated in that. I do like to have some interaction here, so I will be asking you questions throughout the webinar to be able to get some feedback from you to make sure, number one, that you're still listening, and then number two, to make sure that we can have this interaction to make it more interesting and applicable to you. So the C.A.R.E.S stimulus package was passed to primarily affect small business owners. And there's a couple of things that you have to be considering here when you're talking about when you're actually talking about, one second here, I got distracted. When you're talking about this, the multifamily operations, right? If it's a smaller multifamily property, if you don't have any employees, it's gonna be a little more challenging for you to make the case, right? There's two different sides of the whole federal stimulus that you can be benefiting from. So from the C.A.R.E.S stimulus package, that's really where the PPP comes into place, which is the Paycheck Protection Program. And that Paycheck Protection Program allows you to be able to get a loan for up to 2.5 times your payroll. Now on these, when you get that loan for 2.5 times your payroll, if you use it for the payroll purposes, and you can also use it for other things like utilities and interest on rent payments or rent payments on lease payments. There's several different other things you can use it on, but you have to use a certain portion of it for payroll only. Typically about 75% of that 2.5 per times 2.5 of that loan that you're getting, which is 2.5 times your payroll, your monthly payroll. 75% of it has to be used for payroll in order for it to become a grant or be turned into a loan that you don't have to repay back, right? And so obviously working with your lender is very important to be able to understand all the different nuances of this. So you want to make sure that you're being very careful about how you're taking this loan. Let me ask you this: for those of you who are on here, go ahead and raise your hand and tell me how many of you have already applied for this loan, the PPP, for your property? How many of you have already applied for this? So there was over 40 of you that mentioned that you might or could potentially be impacted by this. It looks like there's only about 8, 9, maybe 10 people that have actually applied for it. So one of the nuances with the PPP, as well as the other loan, which we're going to talk about, which is the EIDL loan, which is a different loan that I'll mention as well. But with both of these loans, one of the things that you have to be careful of is that inside of the SBA rules and regulations, they do not allow apartment communities to take SBA loans. So that's actually, and I have an actual resource that I was provided that actually gave us that information that says that the apartment communities are not able to take advantage of SBA loans. Now, there's still some questions there because there are still some things up in the air as to whether or not these apartment communities are exempt from that rule based on some of the stimulus that's being provided across the country. So those things are still kind of up in the air and kind of questions that need to be had. I would suggest going ahead, if you are an apartment community, going ahead and still applying for it, because worst case scenario, they'll deny you, right? So I would still go ahead and try to apply for that. Now, one of the other, and the reason why our apartment communities are potentially eligible is because we're considered a small business, right? We have employees. Now, employees we'll talk about in a minute, but we do have employees. We have also the income and expenses and things like that of the day-to-day operations of the apartment community. But when we're talking about this PPP loan, there's typically, if you're using third-party property management, the property itself, the apartment community, is not usually the one that actually is hiring and paying those employees. Now, they're usually the ones paying them, right? Because we're getting billed back by the property management company, but the property management company is the one who's doing the hiring and taking the risks and all that kind of stuff with the workers' comp and is managing those employees. So technically, the property management company is the one who actually owns those employees. So you have to make sure that you're communicating with your property management company to make sure that they are applying for those PPP loans. So if they apply for the PPP loans, then you can get credits back on your invoices that they're sending you for payroll purposes to be able to give you credits for that. Then you want to make sure that you're actually doing that and making sure that they're doing it, because we've actually our property management companies are working on that right now. But as most of you know, I have multiple businesses that I own across across South Carolina, and across South Carolina, I have several businesses, and some of them share payroll. And we didn't try to double dip at all, but we tried to apply for the loan and separate out, like this clinic, it has this many employees that's being paid by this payroll, this one is this one, and they denied that. And so they actually are matching up the payroll reports, the 1040s, with the tax IDs that are associated with the business. And so if your property is not the one directly hiring those employees, which most likely they're not, you need to make sure that your property management company is the one who's applying for that PPP loan. And you want to make sure that they do it quickly and swiftly, and not trying to delay things, because there is a cap. There is a cap right now on only $350 billion worth of loans available for us on this particular opportunity. So make sure, and then sometimes your lender could be capped. Sometimes the SBA could cap the lender on how much they're allowing those lenders to be able to do it. I will say that from my experience, myself, as well as with talking with other people, one of the things that I am seeing the most is that it's faster to go through a local community bank versus one of the large national banks, because the large national banks have like, one or two people, or not people, but divisions that are managing it. But on the local side, it's usually have a little bit better like one-on-one attention. So if you are working right now with a bank, your property management company, they should go through that local bank. And to give you a quick example, Bank of America, when they first opened this up, in their first 3 hours had over 10,000 applications. Well, the bank that I'm working with, which is a local bank, only had 400. So for being able to get those things out there and put it into the SBA system, it's be a lot faster and streamlined to be able to do it through your local lender. And that's what we've done. And actually, we applied for it with my businesses 2 days ago. Finally got the paperwork in 2 days ago, because they had changed the paperwork that we had already filled out last week on Friday. They changed it again in the afternoon, and so we filled it out again Monday afternoon and got it submitted, and just got word back yesterday that we got approved. So for all the ones that we submitted for, we actually were able to get approved for that. So and then our bank actually releases those proceeds within 6 business days. So by the middle of the end of next week, we will have those funds to be able to use to be able to make sure we can maintain and maintain our employees that we have, which we have just under 50 employees with our clinics. But my other businesses that I own a group of non-surgical orthopedic medical clinics. And so obviously, depending on the lender, it could be delayed as far as how much or how fast they actually give you those funds. So that's the one main program that a lot of people are worried and concerned about, and how to actually take advantage of it from multifamily is really those PPP loans, because it can actually provide you some additional revenue to be able to make sure you can maintain your staff, and to make sure that even if you're seeing a drop in the rent collections, you're still being able to meet the income and expenses and the debt service payments as well. Now, one of the other things that is available for multifamily operators is the ability to, if you have a Fannie Mae or a Freddie Mac loan, to be able to provide them, they'll be able to provide you with a forbearance. Now, forbearance doesn't mean that they're just going to forgive that debt, right? The forbearance means that they are going to allow you to not pay the rent, not pay the mortgage payment that month, or maybe even the next month, but they're going to require you to pay that back over the next 12 months, right? And those are the ones that when you pay that back over those 12 months, then you're going to still have to pay it back, right? So eventually you're going to have to pay it back. It's not, and they're not going to tack it onto the end of the loan, which to me, I think would probably be the best thing, is if they could tack it onto the end of the loan, but they're making you pay it back over the next 12 months after that period. So just keep that in mind, and hopefully you've done your sensitivity analysis on your property to know where your break even is and where your collections need to be in order to make sure that you can pay your expenses, and as well as be able to pay your debt service. Typically on our properties, that's usually about 65 to 70%, and some of them it's a little bit lower, but usually we try to keep that right about that 65 to 70% mark. And thankfully, we talked about April rent and the material here, and the April rent is due, right? And usually it's due on the 1st and it's late by the 5th, because the 5th late on us happened on a Sunday. April 6th is usually the next day on a Monday would be the day when it's actually due. And so across the country right now, the assets that are getting hurt the worst are the C-class and the lower end B-class assets, because those are the ones that have residences that are living paycheck to paycheck right now, and they're the ones that are potentially being furloughed or losing their job, and they're being impacted the most. The little bit higher end properties, the B-plus and A-class assets, aren't seeing as much of an impact. They are still seeing an impact, but it's not as much. We have properties right now that are in those realms that are above 90% collections already for the month of April, which is really great. It's great. It's very strong, and we'd like to be able to see that. But this is definitely, to be able to take advantage of the forbearance, I would only do it if you absolutely have to do it, right? Because there's also other stipulations in there about evictions and things like that you have to not be able to do if you are going to be using forbearance. And so you have to just be careful of that. And so far on our properties, we're not planning on using the forbearance. Not all of our properties have the agency loans with Freddie Mac or Fannie Mae. But for those of you who are maybe using some sort of private loans, like either a bridge debt, CMBS, or Lifeco, or anything like that, then you can talk to those lenders directly and say, hey, we're having trouble. This is where our income level is. This is what's happening. Can you work with us? And I've been hearing that they've been working with people quite a bit. But the best thing to do is to be over communicative to your lenders so that they know exactly what's happening. And I don't think at the end of the day they're gonna keep this as a negative to you, right? Because this is something that was outside of your control. Now, I will say that if you're able to get through this without having to take advantage of those forbearances, even though it won't negatively impact you, if you don't have to take advantage of it, it will absolutely positively impact you to be able to have a property that you did not have to take that forbearance on, and you're able to kind of weather this storm, if you will. And that's one of the things we talk about on some of our webinars about making sure that you have conservative underwriting, making sure you have ample and operating reserves, and make sure that you have that ability to weather a storm like this so that you come on the other end of it and be able to be very strong. All right. Let's see here. What about other federal operating programs? Okay. So the other thing I wanted to talk about from the federal stimulus, and this isn't necessarily in the C.A.R.E.S Act. This is kind of just as a regular economic injury and disaster loan, the EIDL loan. This is where you can apply for on the SBA website. You can apply for a loan, and you don't get to ask how much, but you can apply for an immediate advance of $10,000, and that $10,000 turns into a grant as long as you use it to pay for certain expenses. I haven't heard of anybody that has applied for this so far that has actually gotten it. Let me ask you this real quick. How many of you on here have actually applied for the EIDL grant or the EIDL loan that's available? Go ahead and just raise your hand on here. And it's available to just about any small business that is out there, and it's a very easy form to fill out. You go onto the SBA website, coronavirus.sba.gov. There's a form on there you'll be able to fill out. And it looks like there's over 20 people that have applied for that on here, and they have, so far, I haven't heard of anybody that has actually gotten it. So for those of you, I'm gonna go ahead and lower your hands right now. For those of you who applied, how many of you have actually heard back from the SBA after you submitted that form? Raise your hand. So just real quick, raise your hand, tell me, I heard back from the SBA. See, no one's raising their hand because I haven't heard of anybody so far being able to hear back from them. I didn't get an email, I haven't got a phone call, nothing. I've heard of people calling them in and saying, hey, what's the status? And they're like, hey, it's in a backlog, they're working through it. But I don't know how positive it's going to be for us to actually get those loans. But the nice thing about both of these loans that are available, so from the EIDL loan that we're talking about right now, after they get back to you, even if you don't get the $10,000 grant, let's just say that they allow you to borrow a certain amount of money, you are able to borrow that money for it's a 30-year amortized loan that you can pay back over 30 years. The first year is no payments, and you get that for a 3.75% interest, which is a really good interest rate and debt for your property if for some reason you need that type of a loan. And so that's something you can consider to be able to make sure that you have those extra funds. So it is a loan on that portion of it. And then on the PPP loan side, it's actually a loan at 1%, which I believe the deferment on the payments is 6 months. But you have 2 years to pay that one back, and it's only 1%. And so a little bit different, but hopefully you use those funds properly and you can get it converted into a grant, so you don't actually have to pay that to be able to pay that back, and they'll forgive that loan if you use it to be able to maintain your employees. Okay. The last thing on here that I wanted to mention was about steps to make sure your residents have the money to pay rent. So this is really important for you who have properties right now to make sure that you are communicating with your residences about the different government opportunities, because there are federal opportunities available for unemployment. There is opportunities available for the local and state unemployment benefits. And so if somebody does lose their job, or even if they're furloughed, a lot of states have now allowed them, maybe if they've been furloughed, to be able to take advantage of these unemployment benefits, to be able to still allow them to receive an income. It's not usually still 100%, but when you combine them, it can actually be more than that, just depending on what it is. So you can definitely take advantage. You want to definitely make sure that you use those as a resource to be able to put together a little document that you can send out to the residences that are having problems paying or have told you that they've been unemployed, and making sure that they know where to get that government assistance so they can continue to pay those rents. And this is what's nice about what we're seeing across the country right now. I'm getting reports that the collections are actually coming out, fairly strong, for the most part, from what we thought maybe might be an impact on multifamily. But this goes back to the fundamentals of why we are in multifamily, because people need a place to live. And the very first thing that they're going to pay when they need a place to live is going to be their house payment, right? So whether it's going to be their mortgage or whether it's going to be their rent payments on an apartment or a house that they're living in, that's the first thing they're going to pay. And even utility companies right now are offering, the ability to defer payments, and they may set up payment arrangements for people and things like that. So the first thing that they're going to do is they're going to try to make sure that they're paying that mortgage or that rent payment, which is why we're in multifamily, right? And so that's one of the things that we like the most. And even at such a times as this, we still have those revenues that are coming in for the property. All right, so let's go ahead and answer a couple of questions here that are coming in. So if you have any questions, I'm going to turn it over to the questions. We'll take about probably 10 or 15 minutes to answer a couple of these questions, and then we'll go on from there as well. Let's see. All right, so Tony has a question here. Good to see you, Tony. Actually, was talking about you yesterday, Tony. So you and I need to connect up. Maybe have a full day of webinars and phone calls this afternoon, but maybe tomorrow we should connect up and chat. But I'll send you a text message. But Tony's asking or saying here, yes, but if you have a company like passiveinvesting.com, for example, then you could file a PPP application for your employees of that company, like your marketing people and your asset manager and your analyst that are not employed by the property, correct? And the answer to that is yes, you can. So we have already applied for that for passiveinvesting.com and have already been approved for it as well. So yes, that is an option and an opportunity that's available for you, for your parent company or your syndication group at the same time. So good catch there, Tony. Thank you for bringing that up so we can mention that. All right, so the next thing here is, let's see, Esther saying, I did apply, no answer yet. Yep, that's from the EIDL. Lorelei is asking, are the rules for forbearance the same for private lenders who provided seller financing? So there is no requirement for anybody outside of the agency loans to do forbearance. But I will tell you that most of these private lenders are trying to work with their mortgage holders. They honestly don't want their property back, right? That property back. They want you to keep that. They want you to continue to pay it. And a lot of them have been flexible in being able to do that. So I would suggest, Lorelei, that you base your decisions off of the agency forbearance rules, and hopefully they will allow you to be able to do that as you see fit. So that is an option for you. You just have to have those discussions with those private lenders, including seller finance. And so if you have somebody who is holding a note for you and it was seller finance, they're the ones that can make that decision themselves as to whether or not they can provide that forbearance. Doug is asking about the collateral requirements on the EIDL loan program. So let me bring this one up here, and I've got a lot of questions coming in here. So I appreciate you guys being on here and being attentive and asking a lot of questions. We now have over 150 people live here on the webinar, so that's great. Let's see here. Can you discuss the collateral requirements on the EIDL loan program? So according to what I've read on the SBA website, there is no collateral requirements that are needed for the EIDL loan program. So they waive a lot of those things when it comes to the loan requirements. Now, will some of that stuff shift or change or anything like that? It's possible. It just probably depends on how much loans they're giving out, because they're giving out a bunch of loans and a lot of money right now that they've ever done before. And so we'll have to kind of see how they do things and change things up a little bit. Let's see here if I have any other questions. So yes, so some people are saying for PPP, does the employees have to be a W-2 employee, or will a 1099 contractor employee work okay? So yes, you are able to include the 1099 employees in that for the PPP. So even with some of our clinics, we have some subcontractors that work for us, some 1099 contractors, you can include them in there as well. So that's a good question there. That's how I'm gonna answer that one live. Let's see. So I don't have a lot of information on that, Ira. I apologize. The question that's being posed here is, how does the C.A.R.E.S package or the PPP loan apply to HUD loans on contracts based on contract properties? So the PPP loan is obviously dependent upon, based on people who have employees. So if you don't have any employees or payroll for that property specifically, and it's a property management company, that wouldn't apply to you. But if you have a property management company that is managing those residences and then managing that property, then that property management company could apply for those loans and apply for the PPP loan, and hopefully push that benefit off to you, who actually owns that property and who is paying that payroll. But it doesn't really, as far as the debt on a HUD loan, or having contracts for HAT contracts or anything like that, I'm not 100% positive with that. So I'm assuming that you would probably get some form of benefit, but you would definitely want to contact your lender there to see if you needed to have some sort of a forbearance or something like that. Let's see here. So what if your company doesn't have a payroll? So that's correct. So on the PPP loan side, you have to have payroll in order to apply for that loan. If you don't have payroll, or you don't have employees or 1099 contractors, then it would not benefit you from the PPP loan standpoint, unless, of course, you have the property management company that has those employees. Then if they're making you pay for the expenses of those employees, and they apply for that PPP loan, that can also benefit you from the property standpoint as well, because you wouldn't get billed as high for the payroll for that property. But you can, as a holding company, try to apply for the grant. But if you don't have any income and expenses or anything like that, then it might be a little bit more challenging for you to be able to do that. Let's see. Can you clarify again, in reference to the PPP program? I currently have a third-party management, and the management hired the employees, but we pay their employees their salaries. Are you saying that we should ask the management company to credit those costs? Yes, absolutely. So the way it works is that the property management company needs to be the one that, because they're the one that actually hired and is managing those employees, and they're the ones that are paying those employees technically, because on the payroll reports, those are the tax IDs that match the payroll reports are the tax IDs that are going to match the PPP loan. And so you have to make sure that the third-party management company applies for the PPP, and then they credit you back when they're charging you for those costs once they get that loan. So you should definitely benefit from that as well. Let's see. Next question here. If anyone has seen the NAA form to ask more help from the Congress, please share this to your group. So I will, I don't have a way to copy this from this question here, but for those of you who want information, let me actually, oh, here we go. I got the copy here. I will put it right in here. This is something, if you wanted to follow that, to ask for more funds on here as well. I have not vetted this or anything, but you can definitely do that if you would like to go in there and see what that does. Let me just go here and kind of see what it is. I don't even know. The National Apartment Association has a form here, or something like you can send a message to your congressman to ask for an increase in those funds for the PPP loan. So I just went to that URL right here that he has been put in here. So thank you so much for putting that in there, and appreciate that so much. All right, so let's see here. Next question is, didn't think you can include 1099 people. They are doing their own. If they are doing their own PPP on their own, then no, you can't. But you are able to include that on yours, and I know that you can, because our bank has allowed us to do that as well. So thank you for that update there. All right. Sorry if this has been asked, but can the owner's draw be included in the PPP? In other words, the owner isn't paid a salary but takes a draw. Thank you. No, you cannot include the draws in the PPP. They have to be on salary. So you cannot do that. But I would definitely check with your lender to see if there's ability for you to be able to take advantage of being able to, as an owner, if you're being paid instead of a salary, you're being paid by that way. Check with your lender and kind of see if you can include some of that in there. But from what I have read, the owner's draws are not included in the PPP, because technically, depending on what kind of business that you have, you should be taking a salary for that. So, but any type of, like, for example, like we have properties that we're giving investor distributions, or what are called investor draws. We don't get benefit from those investor draws from the PPP. It just wouldn't make any sense. I mean, it makes sense to me, but I mean, I'd love it, right? But I don't think the Congress is wanting you to do that either. Is it possible for a newly formed holding company pursuing a multifamily acquisition to get an EIDL loan? If you were to borrow up to the $10,000 forgiveness amount, would that affect your ability to raise debt? You have to have had the business in operations prior to, I think, like February 15th or February 29th or March 1st or something like that. There's a date in there that you have to have had the company in existence before that. So if you have a holding company that was pursuing an acquisition, you could apply for the EIDL loan, but the loan amount is based upon income and expenses and making sure that that business can continue to thrive. So if it doesn't need any money to continue to survive and thrive, then the chances of you getting that debt is going to be a little bit more challenging. Do sole proprietors qualify for either of these loans with no employees? So there is, according to the SBA website, there is the opportunity for you to be able to get this. So definitely make sure that you go out and try to get this and go direct with your lender to talk to them about, because you are a sole proprietor, you want to try to apply for this loan. So there is an option on the forms for you to be able to fill out that actually has this on there. And let me actually see if I can pull up one of those forms so we can actually look at this together, because I'll show you what it actually asks. Let me see. I'm going to pull this form up so we can look at it together. Let's see. Find a lender. Where's the form? There it is. PPP borrow application form. So here is the form. Let me just resume sharing here. So here's the form. So on the top of the form here, you can see it actually says sole proprietor. So you are able to do that even if you don't have any employees. Sole proprietor, partnership, C.A.R.E.S, S.Corp, LLC, independent contractor, eligible self-employed individuals, nonprofits, veterans organizations, tribal businesses, and then other. So this is the official form that was put out at the Friday afternoon. It was the time that they updated this. So this is the form that you're going to fill out to be able to take advantage of this. And for those of you who are on here live, how about I just do this? I will send you a link to this form, or to the website, which gives you more information about this program, so you can kind of take a look at it and research it. So for those of you who are watching the recording on this thing, you can go to the SBA website, or you can just go to Google and type in SBA Paycheck Protection Program, or just PPP, and it'll bring you up a link that you can go directly to this page as well. All right. What date would you need to be taking salary to qualify? So again, that goes back to there's two different periods that they're looking at this for. They're looking at it from, you can either choose the period of like January or February of this year, or starting from February of March 1st, 2019 to February 29th, 2020, and getting the average monthly salary costs during that period. And so if you started paying somebody, or you started payroll after that time frame, then unfortunately, according to this program, you would not qualify for that. But definitely check with your exceptions or anything like that to be able to hopefully allow you to qualify for it. Let's see, findhelp.org is useful for tenants. This is from Jamie Arnold out of New York. Put their local zip code in, and it shows several resources for them: food, housing, goods, etc. That's findhelp.org. So that's a good resource there. Appreciate that, Jamie. Got one last question that we're going to take here, and then let's see. All right, let's see here. So it looks like Tony is asking, is mentioning something on here as well, saying that he thinks that the 1099s for the PPP changed before April 3rd. So that would be last Friday. So saying that you might want to mention that to people to check in deeper on it. They decided to let 1099 employees file for their own beginning tomorrow. So no longer can you and I list 1099 employees. I could be wrong, but that is my understanding. So yeah, so I would definitely we'll check into that and look into it a little bit further. I know our lender had asked us questions about that and actually approved, and then the SBA approved it. So I'm not sure if maybe we just got in before they changed it or something like that. But I would definitely, as Tony said, go in there and try to find out some more information to make sure you're doing things properly. Obviously, if you're working through a lender, they're obviously checking certain boxes and making sure that you're not doing anything wrong either. So they'll be going through your payroll reports and your 1099 reports and making sure that they're being paid properly. All right, let's see. Regarding QIP, the timeline for this was supposedly from 39 years to immediate in the C.A.R.E.S Act. Is this correct? I'm not really sure what QIP is. So I'm not sure if I can really answer that question. Well, it looks like there's been quite a few questions. I appreciate everybody joining us here. For those of you who haven't done it yet, I would encourage you to go to mfinsummit.com right now and sign up for the Multifamily Investor Nation Summit that's coming up on June 11th, 12th, and 13th. And for those of you who joined us early, I did give you out a promo code that you can join, and I'll send this out to you real quick here on the chat box. For those of you who joined us on the webinar, you can join for a discounted amount off of the price that we're listing there, but that's only available over the next probably 5 to 10 to maybe 15 minutes after we leave the webinar here today. So thank you so much for being here. The webinar next week, let's see if we can get this thing to update here properly with us. Good. Next week, our topic next week is going to be how to accept international investors in your apartment syndication. So make sure you go to the website there and register for it. Let me give you the link real quick on where to register. You can go to MFIN, or excuse me, you can go to multifamilyinvestornation.com /MFIN webinar. And for those of you who are on right now, I will type into the chat box the URL to go find out more information about this next webinar coming up next week. And so thank you so much for being here. Hope you guys all stay safe. I hope you stay healthy, and we'll see you next week on the next webinar.